Hello folks, this is Jeremy North with 360 IRA with your educational economic update for October 2017. So in this month's video, I'll discuss some of the major headlines that influenced the markets in September. I will also provide insight into what these developments could mean for you as an investor. So please stay tuned at the end of this video for a very exciting required disclosure statement. So as we enter October, the third quarter of 2017 is now behind us. While we still have to wait to receive most of the quarterly data, one detail is certain. Major indexes performed very well between July and September. The S&P 500, Dow, and NASDAQ all had positive performance last month and gained at least 3.9% for the quarter. Each one of them are up around 9% or more in the year-to-date 2017. So with all this growth, we have seen indexes also hit a number of record highs. And this quarter's last trading day on September 29th was really no different. Both the S&P 500 and NASDAQ closed with new record highs, with the NASDAQ reaching new heights for the 50th time this year. The Dow closed only 0.1% away from its record high and notched its 8th straight quarter of gains for the first time since 1997. The S&P 500 also ended the quarter up for the 8th time in a row, and the NASDAQ had its 5th straight quarter of gains. Between the recent weather disasters and geopolitical tension, last month's positive market performance might seem surprising, but rather than mirroring this volatility, markets were relatively calm. In fact, the S&P 500 had its least volatile September in history. So now we'll look at what happened last month and why and what may be on the horizon. So right before the end of September, we received the final reading of gross domestic product, or GDP, which is a critical measurement of the economy's growth. The data showed 3.1% growth in the second quarter of 2017, and this reading slightly beat expectation, which indicates that the economy is growing faster than many people anticipated. In addition, the latest readings of personal income and consumer spending increased. The services sector also showed growth, with 15 of 18 industries in the ISM non-manufacturing index having positive readings. And after struggling for years, corporate earnings seem to be back on solid ground. Last quarter marked the first time in 6 years that corporate earnings had 2 solid quarters in a row. But the economy still has room for improvement. Industrial production and retail sales fell in the most recent readings. And the Fed's preferred inflation indicator, the PCE, once again showed that inflation is far from the 2% rate that the Feds hoped to see. Nonetheless, the Fed has stated that they plan to raise interest rates 4 times before the end of 2018. If inflation remains low, they may have to rethink this plan. One change the Fed will be making is to begin lowering their massive balance sheets this month. During the Great Recession, the Fed plunged trillions of dollars into the economy. The Fed now believes the economy is strong enough to handle more normal monetary policy. So far, the markets haven't had a strong reaction to the Fed's long-anticipated decision to reverse its so-called quantitative easing. But we will continue to monitor this action and a variety of other economic indicators throughout the rest of 2017. So, looking ahead, many potential and political changes could be on the horizon, including tax reform. We are studying how any policy or economic updates could affect the markets. For now, if you have questions about anything in the news or want more guidance on balancing your finances or any other questions, of course, I am here to talk. That wraps up my monthly educational economic update for October. Once again, this is Jeremy North with 360 IRA signing off for the month of October 2017. Please remember that nothing that we talk about here could be construed as a recommendation. If you would like to discuss your personal financial situation, again, please give me a call at 636-896-4052. I am more than happy to work with you or discuss it with you. And here's my exciting disclosure that I have to read here at the end of my update. So while we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. This is Jeremy North, October 2017.